Ladies and gentlemen, good day and welcome to the Matrimony.com Q4 FY22 conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Thadani from IIFL Securities Limited. Thank you and over to you.
Thank you, Mike. Good evening, ladies and gentlemen. Apologies for the slight delay in starting and thanks for joining us today on the Q4 fiscal 22 earnings call of Matrimony.com Limited. On behalf of IIFL Securities, I would like to thank the management of Matrimony.com for giving us the opportunity to host this earnings call. Today we have with us from the management Mr. Murugavel Janakiraman, Chairman and Managing Director, and Mr. Sushant Pai, Chief Financial Officer. With that, I will hand over the call to Mr. Murugavel, sir, to take the proceedings forward. Thank you and over to you, sir.
Thank you, Saurav. Good evening, everyone. I hope all of you are continuing to stay safe and healthy. When we started last year, the second wave of the pandemic caused a grave situation to people and business. Apart from the people centricity, we had a relentless execution of our strategy through our committed leadership and passionate associates. And we are all working towards our core purpose of helping people to find a right life partner. The focus and our purpose helped us to minimize our impact and we could achieve the desired outcomes. I'm happy to state that we achieved a 15% revenue growth in FY22 and a 31.4% in PAT growth, which we believe are a good outcome in these situations. If you could exclude the losses we made in wedding services of 9 crore, the profit would have been 61 crore at the enterprise level. I consider our performance and so we believe that and the intrinsic value of Matrimony.com doesn't reflect the current share price doesn't reflect the intrinsic value of Matrimony.com. So while we announced a dividend and we also announcing the buyback which Sushant will be sharing. However, we believe that the growth momentum what in FY22, the growth momentum will continue to get better. And in FY22, we have done a lot of significant contribution in terms of business and offerings to our customers and to our stakeholders. Some of the key milestones for the year are as follows. We launched Jodi, a new offering for people targeting, new offering for people who are non-degree holders. Today we are offering this service in 10 vernacular languages and at an affordable price and at a simple user interface. And we launched unique acceptable matches features to help members' profile to be seen and contacted only by the relevant matches. A launch of a video profile feature to help customers who want to go beyond words and picture to express themselves. A launch of Bangladesh operation and acquisition of Shadi Saga, scale up our presence in wedding services. We successfully integrated Shadi Saga into Wedding Bazaar. Today, Wedding Bazaar is India's largest wedding services marketplace. And with Mandap.com and WeddingBazaar.com, we have more than 1 lakh vendors. And we expect that growth momentum of Wedding Bazaar to further improve. So, the social initiative campaign what we launched along with the MS Dhoni, that is the Pele Badai Shadi, we are looking at helping the girls in Rajasthan to choose education over marriage. That's our social initiatives that we launched in the FY22. Launch a new HRM system, partnering with People Strong, and the migration to AWS towards our services which help us to execute and scale faster. While this will have some costs in our operation on site, but however in the long run which helps us to execute faster, also the depreciation in the coming years come down, but not in this year, but in 1 or 2 years down the line. Let me come to the results in Q4. On a consolidated basis, we have achieved rupees 115.1 crores in billing, which is a 7.9% year-on-year growth. Revenue were rupees 110.6 crores, which is a 9.4% year-on-year growth. And for the full year, we achieved rupees 430 4.4 crore of billing, which is a growth of 12.9%. Revenue for the full year was rupees 434.5 crore, which is a good 15% growth. The key highlights for the matchmaking business are as follows. In quarter 4, the billing was rupees 113.2 crores, a growth of 6.7% quarter-over-quarter and 6.7% year-on-year. Revenue at rupees 109.1 crore, a growth of 1.8% quarter-over-quarter and 8.4% year-on-year. For the full year, the billing were at rupees 430 crore, a growth of 12.2%. Revenue at rupees 430.4 crore, a growth of 14.5%. We added 2.34 lakh paid subscriptions during the quarter, which was a growth of 8.8% quarter-over-quarter and 3.1% year-on-year. We added 8.9 lakh paid subscriptions during the year, which was a growth of 6.8%. The ATV for the matchmaking business increased 3.3% year-on-year, but declined 2% quarter-over-quarter. For the full year, the ATV increased by 5%. We continue to track the impact we create our customers. We are happy to state that we have created around 24,000 success stories in quarter 4, taking a total of 104,000 plus success stories for the year FY22. Now coming to the marriage services business, revenue was rupees 1.5 crore, a growth of 209.5% year-on-year. The losses for the quarter was 3.1 crore compared to rupees 2.9 crore in the previous quarter. For the full year, revenue was rupees 4.1 crore, a growth of 89.6%. Losses were at similar level of FY21 at 9.6 crore. On the billing and revenue outlook for quarter 1, on a consolidated basis, we expect a growth momentum to continue, with the billing and we expect to grow double-digit growth on a year-on-year basis. The growth amount of wedding services will further increase. We expect the wedding service to grow at a triple-digit basis. However, the losses will be at a similar level. Before I conclude, I would like to thank all our customers, employees, investors, stakeholders, and partners, regulators for the continued support. Let me pass on to Sushant to comment on the key profitability highlights. Sushant, over to you.
Yeah, thanks, Muruga. Our EBITDA margin for the matchmaking business in Q4 is at 22.7% as compared to 24.5% in Q3 and 23.4% a year ago. For the full year, EBITDA margins for the matchmaking business was at 26% as compared to 23.9% in FY21. Marketing expenses are at rupees 42.7 crores as compared to 41.6 crores in quarter 3. Marketing expenses for the full year was at rupees 161 crores as compared to rupees 137 crores in FY21. Excluding marketing expenses, our margins in the matchmaking business are very robust. It's at 63% in FY22 as compared to 60% in FY21. This indicates operational efficiencies that have brought in this improvement and also due to increased revenue. On a consolidated basis, our EBITDA margins in Q4 are at 18.1% compared to 18.6% in quarter 3 and 17.7% a year ago. For the full year, our EBITDA is at 90 crores, which is 20.6% as compared to 70.6 crores in FY21, which is 18.6%. This is a good growth of 27.5%. Tax rate is at 25.8% for the quarter and 25.2% for the full year. PAT, excluding Astro, which is our associate company, is at rupees 11.9 crores, an increase of 1.9% quarter-on-quarter and 17.3% year-on-year. Share of loss from the Astro, which is associate company, is 16.8 lakhs. PAT for the full year, excluding Astro, is rupees 54.4 crores, which is 12.4% PAT margin, as compared to 41.3 crores, which is 10.9% in FY21, which is again a good growth of 31.5%. Our free cash generation has been robust at 17 crores for the quarter and rupees 60 crores for the year, and our cash balance is at rupees 334 crores. On the outlook for Q1 margins, given the salary increments in the range of 8 to 9% in Q1 and increase in marketing expenses in newer areas, we expect EBITDA and PAT to decrease slightly from the Q4 levels. However, this profitability will pick up from Q2 onwards. Other announcements in the quarter are as follows. The Board of Directors at its meeting held on May 12, 2022, which is today, have recommended a final dividend of 100%, which is 5 per equity share of par value of 5 each. This is subject to the approval of the shareholders. Apart from this, the Board of Directors, again subject to the approval of the shareholders, have recommended the buyback of equity shares not exceeding rupees 75 crores at an indicated maximum buyback price not exceeding rupees 1150. I would like to end with the customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company, unless it's required by law. That ends our opening remarks. I'd like to pass it on to Saurabh and Mike for opening the Q&A.
Thank you, sir. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Prakash Kapadia from Arif Portfolio Managers. Please go ahead.
Yeah, thanks for the opportunity. Congrats, Muruga, on taking investors' feedback so positively and announcing buyback and signaling to the market about our valuations and the belief in the business and the ability to create wealth for shareholders. Congratulations for that. Couple of questions from my end. Are promoters going to participate in the current buyback?
Yeah, because thank you very much, and I appreciate your the suggestions and the feedback, and we definitely value all the investors and the feedback. And in terms of the participation from the promoter side, no, I'm not participating. In fact, 3 months ago I did buy shares from the open market. So if I get a chance, I'll buy more. So because I truly believe in the long-term potential of Matrimony.com.
That's really good to know. You're giving an opportunity for shareholders other than promoters to benefit even more. That's actually a very good sign. Really appreciate that. Couple of other questions. This quarter, if I look at the billing rate, it is, up 8% on a year-on-year basis and on a sequential basis around 7.2%. So just wondering, am I missing something? Because, we keep on reading about record weddings given unlock. This summer season, wedding season is very high. So in that context, is revenue growth slightly lower than expected, or is there some spillover in Q1? If you could give some sense on the revenue side.
Prakash, thank you. And while you expect a double-digit growth in Q4, yeah, we ended almost 8%. See, the weddings are different than the matchmaking because, while the wedding service business is different, the wedding service business, it's continuing to grow at a double-digit basis because obviously we're on a smaller base at this point of time. On the matchmaking side, because when the people find a life partner and when the people getting married are two different things. Normally it takes around 9 months to 1 year or to people to find a life partner. That's average where people stay on our Matrimony platform. So two different things. So the wedding seasonality, yes, in a way that when more marriage happen, that it will get the people to enroll into that. That's contribute to the number of people coming into the matchmaking platform. But both are two independent things. So the marriage taking place, that's not kind of correspondingly increase the revenue and other things in the same quarters. Yeah, but all more number of marriages definitely kind of there's a lot of more publicity. People know that okay they got married in matrimony. It definitely increases more people coming to the platform. But again, set up to independent things. So that's what I want to share. In terms of the Q1, definitely we expect this year growth will be better than the growth what we had in the last year. Where last year growth on the matchmaking was 12.2. We do expect this year the growth will be better than the previous year in terms. So we are investing behind new opportunities, and we definitely see the momentum in the business. So we believe that the growth will be better this year.
Understood. And lastly, from my side, ad spend seems slightly higher. Is it due to the slightly lower revenue growth we've seen, or is it competitive intensity which is where it was, or maybe some increase? How do we look at that headline number?
Marketing wise, we continue to invest on the marketing. In terms of our operation cost, as I said, we moved to AWS. But the AWS, kind of has pushed our operation cost because earlier we are hosted under service provider where we used to buy servers, so that is more on the capex side. I moved to AWS. The benefits of moving to AWS is in the longer run we know to buy servers, so it will help us in our cost going down on the depreciation. However, in the short, obviously, since we moved to AWS, there will be some increase in the operation cost. And there is some increase in operation. However, the benefits are that we could able to execute faster, able to move, and drive things faster because rather than waiting for buying server and putting a recurring infrastructure. Well, in my view, that we could have done this probably 1 or 2 years before. We are little late. However, finally moved to the cloud platform. It will give the flexibility in terms of on how you can able to execute things, and so that way it's definitely useful for us. But yes, in the short, from now on there will be some increase in the cost, which already started seeing from Q4. But however, as I said, in a couple of years down the line, the benefits of that will be depreciation.
Start coming. Understood. Thanks. I'll join back the queue if I have more questions, and congrats once again on taking these initiatives. I'll join back the queue if I have more questions.
Thank you, sir. Hello, Saurabh. Hello? Hello?
We have the next question from the line of Nilesh Shah from Individual Capital.
Yeah, hi. Thank you for the opportunity, and thank you so much for announcing the buyback, taking our feedback. I think it just reflects your confidence in being able to grow this business in the most capital efficient manner. And if I've heard you correctly, that the promoters are not going to be participating in this buyback, which again reflects your respect for minority shareholders. So I'm taking this opportunity to convey my thanks for the wonderful decision taken and best wishes for the future as well. In terms of the business, can you just kind of give Muruga some more light in terms of the wedding services business? I mean, I think now the acquisition and the integration is probably more than now, almost a year or probably a bit more than a year. Can you give some more light in terms of how is that business shaping up in terms of some more qualitative detail? Any milestones achieved or that we are likely to cross in the near future, and how is that business shaping up, please?
Nilesh, good evening. Thank you very much. Appreciate your views. And in terms of wedding services, we bought the company sometime in September. The integration just got over, so it just happened in the month of April. We successfully integrated Shadi Saga into Wedding Bazaar. So today, Wedding Bazaar has become India's largest wedding service marketplace. So we definitely see the good momentum in this business because definitely Shadi Saga has brought in a lot of capabilities in terms of product, value delivery, and some other interesting thing on the product side as well as on the service side. So with this, we are now all set for wedding services business to grow. To achieve our goal of to become a 100 crore company in 3 years. We see that growth is momentum has been picking up. We see that the business growing on a quarter-on-quarter basis, year-on-year basis. Year-on-year basis, definitely grow at a triple-digit basis. When in Q4 we done a close to 2 crore, and the business continue going to grow. In terms of the integration just got over, the put together listing wise, we have more than 100,000 listings. That makes us India's largest wedding service marketplace. And this integration just got over. The business was bought only in the month of September. It took 6 months for us to integrate things to become a single entity. So Sadi Saga ceased to exist. Now it's become integrated both the business. You're now going to operate only one name on wedding services. It's going to be weddingbazaar.com. But then you have mandap.com. So anyways, hope that answers.
Just a follow-on question on that we've been kind of incurring a net loss of about 3 crores every quarter on this business. Do you think that's still a number which will kind of hold for a few more quarters, or you think that's like kind of peaked and is probably likely to now start trending downwards?
Yeah, I think it continue to operate at this level for next couple of quarters. However, when the business grows, and obviously it's going to grow, and as I told you, the plan is to be a 100 crore company next 3 years. So, and we see that the growth is happening. Yeah, the next couple of quarters the loss will be similar level, but as the business improves, the loss will also come down. So, probably, hopefully, maybe in a couple of years or a year down the line, probably we see whether hope we can able to get into EBITDA breakeven. But again, I don't want to be sure of that one, but we see that the traction and growth. So yeah, in the short term, yes, loss will be at a similar level.
I'm sure your hands are full now with both the matchmaking and the wedding services business, but any other adjacencies that we are beginning to explore or evaluate, or that we have any plans in the near term, or are we kind of currently we are occupied with both these two segments for now?
We continue to explore opportunities in the core matchmaking and the wedding services area. So as an organization, we keep evaluating opportunity, keep exploring new avenues to drive growth. They continue to happen.
Okay, fine. Thank you so much, and good luck for the year ahead. Thank you so much.
Yeah, thank you, Nilesh. Yeah.
Thank you. We have the next question from the line of Pranav Shtaria from Edelweiss. Please go ahead.
Hello. Yeah, thanks for the opportunity. I have a couple of questions. Firstly, can you comment a bit about how should we see the cost going forward, specifically the employee cost and advertising cost. So the employee cost, for most of the internet companies have seen a fair bit of escalation. For Matrimony, the escalation is much lesser. So should we see bigger increase in employee cost in FY23? And also on advertising cost, how do you see FY23 advertisement panning out, considering current competitive intensity, and any comment on the competitive intensity? Thank you.
Yeah, in terms of employee cost, probably maybe grow by 8 to 9%. So kind of efficient organization, and so that way, so we see the apart from that appraisal and some additions, we feel that we could able to manage with this kind of cost. In terms of the marketing costs continue to increase, but because we invest in new opportunities and new avenues to drive growth. However, probably we had last year spent 160 crore. Yeah, definitely increase in marketing. But we do expect that we will begin the growth, and as I say, the growth will this year be better. And so that way, yeah. So yes, employee cost we spoke about, the marketing definitely going to increase. And in terms of competitive intensity, if that reduces, that definitely our marketing costs also reduce. In fact, if not for that increased competitor marketing spend, our profit would have been probably maybe 100 crore last year we could have achieved, because last year spent 160 crore on marketing, probably could have even managed with 100 crore on marketing. However, we expect this to continue, but however, we are kind of, as an organization, we are continue to grow, continue to widen the gap in us and the competitors. And maybe in the future that the competitor reduce, probably those benefits come into our EBITDA. So we continue to reinvest and run our efficient operations, and it's good better. So yeah. So that's how we have.
I mean, if I have to summarize, you're saying that the competitive intensity has been largely stable, and 160 odd crore rupees what you spend on marketing will grow in line with the revenue, assuming the competitive intensity remains where it is. Is that fair assessment?
Yeah, that is some increase in marketing. Depends on how the overall scenario, how we see the outlook for some of our initiatives, how the competitors are going to conduct themselves. Depends on various things. But we do see increase in marketing, and however, we do see that our growth this year will be better than the previous year.
Can you comment a bit on the growth? I mean, is it the market expansion or realization improvement or, market share gains? Which of the levers you think is going to drive growth for this year?
The combination, we continue to exhibit very well and continue to gain market share and continue to expand and, working on new avenues to drive growth. So, and with global expansion, and our growth in our personal services, online services. So, the combination of various factors are driving the growth. We expect that all the things continue to kind of get better, and we see that kind of outlook. So, yeah, we definitely gaining share from our competitors, and we are growing, and yeah.
Can you highlight any, is the growth higher in certain geographies or, let's say, North market or West market or anything like that?
Yeah, no, South and East are very dominant markets of Matrimony.com. However, we are actually leading player, number one player in West. And North is the only market where, we are fighting with other players. There also we're seeing that, the growth momentum. So it's growth is across the market and not limited to any particular geography. And however, we see the North is where, they see the intense competition. But again, North is one part of our business. So we continue with our strong dominance in the regions where you are with a strong reach and strong dominance. That's continuing, and we are definitely gaining share in other regions as well. And so, yes, the growth is not limited to any particular region. It's across the regions.
Sure. Thank you so much for the answers.
Thank you. We have the next question from the line of Sonal Minhas from Prescient Capital. Please go ahead.
Hi, sir. This is Sonal. I hope I'm audible.
Yes, yeah.
Sir, just reconciling from the last few analyst calls we've been participating in, and we've been basically trying to inch towards like a quarterly revenue run rate of close to 120 to 125 odd crores, which basically means like a revenue top line of 500 crores on a run rate basis. And currently we are at 110 as we speak in this particular quarter. So I just wanted to understand like is there a timeline we have in our mind for that, and are we in our own expectations at par with that timeline, or there are some challenges in the market which make us maybe a step behind our own internal benchmark on that particular number? And if you could highlight the challenges if there are any, that will be great to understand.
Thank you. So in terms of the billing, we look at the billing. The billing for the quarter was 115 crore. So with just another 10 crore, we get into a 500 crore run rate. We definitely sometime this year, probably maybe a second quarter or possibly I don't know, may get into that kind of run rate. So if not quarter 2, maybe quarter 3, but we are almost there. It's a matter of time. We'll be getting into 500 crore run rate. The post that the goal is to be once we hit the 500 crore run rate, obviously we know that the next big milestone for us to become a 1,000 crore company. So hopefully we'll be able to get there probably in 3 to 4 years. Yeah.
Understand. And sir, from a competitive intensity perspective, like just want to understand, given how the liquidity is getting out of the market, are you seeing like signs of marketing tapering by your competition in the last 2 months, or anything subjective around there that makes you believe that the marketing intensity should taper or should stagnate at these levels?
No, we are not seeing any significant reduction in the marketing because, the Info is one of the players. They have the deep pockets. They can invest as long as they want. And the other players, that they will also continue to invest. So we, at this point of time, we are not seeing any slowdown, but we have to wait and see whether there is any, total anything. However, we are kind of well placed. And so if the competitive intensity reduces, that means we can reduce some saving on marketing. So we will not be spending a similar level on marketing. However, as I said, we have the growth ideas, growth initiatives, and we continue going to invest in these initiatives. We expect, that, the growth, the increases and the revenue increases, we see that our EBITDA margin also continue going to increase. The competitive interest reduction means the EBITDA margin further moving down. I don't know whether it's going to happen this year or next year, but that's something very difficult to see at this point of time.
Understand. So if I may sneak another question, which is related, can I?
Yeah, please go ahead. Yeah.
Sure. Sir, on the top line growth, I just want to understand if you could give a ballpark of or split the numbers between your new geographies and your existing geographies with the South Indian market where you're dominant. What are the growth rates you're seeing in new geographies versus the South Indian market? If you could just maybe highlight some subjective or numerical data on that, that will help understand the split, how you're doing in the existing and the new geographies.
No, South and East we are dominant players, and we are a number one player in the West. It's the only market where we are sort of fighting with other players in our market. So for competitive reasons, we are not going to break up. However, as I said, we have been growing across the markets, not limited to any particular geography. So just kind of at this time, we don't want to do the breakup of region-wise growth and all.
Okay, but you're happy with the growth in your existing markets where you're dominant player. That's more what I wanted.
Yeah, definitely. We have that's a very, very strong market for us, and a strong network of a strong reach. So, yeah.
Got it, sir. Okay, that's it from my side. I'll come back in the queue.
Sure, thanks.
Thank you.
Thank you. We have the next question from the line of Vivekanand Subramanian from Ambit Capital. Please go ahead.
Hi, thank you so much for the opportunity. I have a couple of questions. So one is on the billing growth in the matchmaking services business. We have seen that through the year there has been a moderation of growth of billing, and we have managed to deliver a good billing growth for the full fiscal year, around 12.2%. But as we closed the year, this billing growth was lower. So, Muruga, how should we think about the growth for billing, and why is the industry billing not growing despite, as you yourself admitted, the 160 crore of advertising, you could have very well delivered this growth with 100 crore of advertising. You're spending 60 crore more, right, for as an investment for growth. So, why is the segment on the whole not growing as fast as some of the other tech businesses? That's question one. The second question is on Jodi, which is the across Indian languages you have launched this app. How is the sign-up rate here and the experience, and by when do you think this will start contributing meaningfully to your overall revenue, or at least in terms of the paid transactions? And Sushant, just to understand the transactions, paid transactions better, does this also include contribution from Jodi in the matchmaking segment? Thank you. Those are my questions.
Thank you, Vivekanand. So, in terms of the growth, we expect outlook for matchmaking this year. Definitely, matchmaking this year will be better than the FY22. Okay. So we continue to take steps, whether expansion, new initiatives, or continue to drive the core matchmaking business growing at a better rate. So we definitely see that this year the growth will be better. In terms of the Jodi, Jodi is obviously it's very new. It's 6 months. We're definitely seeing kind of some traction. Again, it's very, very early stages. So to comment or give any breakup of jewelry and all that. So as I told you, just 6 months old, it's still in the early stages, and so we see some traction, but again, we are to comment on those things. So yes, the everything evolving, everything includes the jewelry as well. Because as I told you, jewelry is a very new initiative. It just even other languages just launched recently. It was coming for almost 4 or 5 months. We rolled out other languages in the last couple of months. So we also sort of invested behind it. Again, it's too early to kind of do any detailed thing about jewelry.
Okay, if we delve a little bit deeper into the outlook that you mentioned, are you suggesting that the outlook for growth should be better than the full year fiscal 22, or are you suggesting that the billing growth should be better than what we saw in Q4? I'm not very clear on this. Sorry.
No. Basically, what I meant was the growth for FY23, what you see on matchmaking, will be better than the FY22 growth, which is FY22, the growth on matchmaking was at 12% on billing. We expect the growth for this year matchmaking will be better than the FY22 for the full year. So that's it.
Okay, so the question that I have here is that considering that the last 2 quarters we have been growing matchmaking billing at say 6.1 and 6.7% now, what gives you the confidence that this billing growth can accelerate to beyond 12%, which is the number that you aspire to achieve?
I just think that one thing that we have almost we just concluded the migration to AWS. It happened in the month of April. So we are sort of last 1 year we were kind of pretty much our technology team was focused on the successful migration. So we are in a way that we are constrained by our ability to execute some on the technology product side. Now the migration happened, we could be able to execute some of the initiatives. We already started doing it. We're seeing some traction there. Plus also the steps we have taken in terms of geographic expansion, business expansion, other steps we have taken, some of the things what we have done in the last year, all those things have started yielding this internal customer services, we've seen the traction. So the combination of the steps what we have taken and the steps what we are taking, and all the things give that confidence outlook what we have. Again, I'm just talking about when you are on mid-May, and the growth what you have seen up to today, which is kind of we are on the double-digit growth. So all the things we see that clearly that the growth will be better now. It's a combination of steps what I have taken, and as I told you, some of the point what I mentioned in terms of the ability to execute fast will be better in terms of consumer the cloud platform. So that's the new businesses and other things.
Last question from my side is on the cash balance that we want to be comfortable with, because what we have announced a fairly large buyback, and till last year we were not returning as much cash as we are planning to do with this buyback. So I am just trying to understand, is this something that you have done purely because you believe that the business is very, very undervalued, or is this a buyback that you would want to do practically every year as a discipline to return a certain amount of cash to investors?
Thank you, Anand. Definitely this is not very much undervalued. Okay, so even at the price what they're offering, I do believe it's very much undervalued, because as a leader in this space, it's a 60% market share. It's a very cash efficient business and a cash generating business, and other stability and growing consistently, no matter how the underlying economy or no matter whatever the situation of economic situation, whatever this business has been a very stable ability to grow. However, the growth would have been better, but however we are taking steps, and we expect the growth momentum to get better, and we further pick up from here onwards. So definitely, the business is very much undervalued. Okay, so that's one thing. In terms of whether it's going to be on an annual basis, we kind of that the board will decide time to time. Again, I don't think it's on a yearly basis. Probably anything you want to comment on that.
Understood.
So Vivek, just to add on this, as you know, we are a cash generating company, right? We generate most of data into cash, And if you see last year or even this quarter, we have generated 17 crores of cash, and last year about 60 crores. So, much of it will come back within the year itself. So therefore, obviously, one which Muruga said is a signaling. Second, we are also comfortable with what we have declared. It's not that we were under any pressure to declare any sort of buyback or anything like that. We believe it's a comfortable thing. It's a good way to give back to shareholders. And as you know, there are only very few methods to give, in terms of either it's a dividend or it's buyback. We've also increased the dividend slightly from 70% to about 100%. And payout ratio is at approximately 20% plus. I think combination of all this and what we want to do next year obviously depends on how the plan goes, how our performance goes, and accordingly the board will decide what it deems fit.
Also, there are multiple ways to deploy cash. We continue to look at the various ways to kind of deploy cash and all that. But this year, yes, the board has declared the dividend plus buyback. And maybe we'll do something else also. That depends on the opportunity, depends on how we want to deploy the cash. There are multiple ways to deploy the cash, but we continue to look at the ways and to increase the shareholders' value and so on.
Okay, and Sushant, just one bookkeeping question that I forgot to ask. What is the cash and cash equivalents balance that we have today as on 31st March?
334 crores.
All right. Thank you. Thank you so much and all the best.
Thank you. Thank you.
Thank you. We have the next question from the line of Samir Pardikar from ICICI Direct. Please go ahead.
Can you hear me?
Yes, Samir, please go ahead. Yeah.
I think so we have informed the professionals about intention of our selling of our Chennai land. So what is the progress on the same and how much value we expect to realize from this sale and what are our plans to use this proceeds for?
Yeah. So what is the first question you had?
What is the progress on the sale of land in Chennai that you informed the professionals?
What is the?
Progress on the sale of a land in Chennai.
Progress on the land. So, we just, the shareholders' special resolution has just been passed. So the board has taken on record such a resolution. What we intend to do is, we want to follow a very professional process for this whole thing. So few things we will do. One, the board will form a small committee to overlook this whole process. Second, we will also do a fair value of the land by an independent registered valuer. The board has also decided that it will not sell the land below the cost price, whatever the cost price is. So it will be basically, higher of the cost price or the fair value, whichever is higher is what the board will decide to do. Sorry.
And what are we planning to do?
Yeah, and the fourth thing is that, we will sell to parties, who are not related parties in nature.
Okay, and what are we planning to utilize these proceeds for marketing expenses?
Mr. Pardikar, this is the operator here. Would request you to kindly come a little closer to the mic as your voice is not very clear.
Sure.
Can you hear me now?
Would you want me to repeat it?
No, I said, what are our plans to utilize this proceeds for once we realize the value from the land?
Yeah, so whatever value we get it from the land will be used for advertising expenses.
Okay, thank you. That's all from my side.
Thank you. We have the next question from the line of Rajanna from NR's Family Office. Please go ahead.
Yeah, hi, very good evening, and thanks for the opportunity. And I have been a staunch believer of your business for a very, very long time, and I'm very happy the way the business has been progressing consistently. I have a couple of requests before I ask a question. To begin with, I have a request that if you could also start sharing a quarterly presentation with the business updates and also the future outlook. I think that should help investors like me and probably more. That's a suggestion and a request. Coming back to my question, I think there's been a lot of discussion around the growth and I clearly see the concern, amongst everyone, and it's true for me as well. So is there a way you could actually share a slightly broader picture for the next, 3 to 5 years in terms of what's your vision? Okay, what are the kind of strategic initiatives? What are the growth drivers which one has been exploring? Is it possible for you to share a broader, larger picture of the business?
On the presentation, we do a quarterly presentation on the highlights of the results and what we think about the business, as long as also along with the background of the company and everything. It is uploaded on our website after every quarter, so you can also refer to that as well. Is that what you were meaning?
Well, I don't see the same on the BSC or on any other site, so probably I've been missing it out.
Sure, we'll check about that.
In terms of growth, the matchmaking, so the matchmaking has the 3 levers. So I think it's all very fundamentals to the nature of the business. One is that getting more members to sign up, that is the top of the funnel, and converting the member to free members into paid members at what is the transaction value. We continue to figure out or working on ways to drive all the 3 things. So increasing the number of members to sign up on our services, and continue to work on the conversion percentage, and continue to drive the average transaction value for the right customer at the right price. That has been a broad strategy for us. And again, this is a broad strategy. Well, this has been a broad strategy, and there are so many underlying strategies around this broad strategy. So what are the steps that we are taking to get more members to sign up? So that's been one of the things. And again, in terms of conversion, it's a combination of product and the sales and various other strategies that's happened on regular basis to get more members to go from free to paid membership. And as I told you, average transaction value is a combination of people taking online services, partner services, and get the member to pay the right product, choose the right product at the right price. So in terms of that, I want to thank you being a strong believer of Matrimony service. So definitely, we are thankful for that. But definitely, this business is one of the business in a very limited cash and has immense potential. So we continue to work on the various strategies and on our ways to get all the 3 areas to get better. So whether it be the geographic expansion, whether it be the setting of the Bangladesh, whether the new business will be the Jodi, or last year we launched some of the initiatives like new offerings also launched. So continue to look at the various ways to expand our offerings and the various ways to drive the conversion. So again, there's a broad strategy, there are sub-strategies. We don't want to get into too detail on those things, but this probably sort of kind of sums it up in terms of how we are looking at the growth and what are the levers to drive the growth.
Yeah, I appreciate that, and thanks for that. Somewhere you also mentioned about 1,000 crore, vision. Is there a kind of a vision statement? I mean, when do you see ourselves, striking that 1,000 crore plus kind of a revenue? Is there a kind of a roadmap for the business?
Yeah, definitely. We definitely this year will cross 500 crore, billing, and we hope that we can run rate probably sometime, maybe in the coming quarters. But definitely this year the company will cross 500 plus crore in billing. And in terms of 1,000 crore, yeah, probably maybe next year, maybe around 4 years or so, possibly 4 to 5 years, possibly. So maybe depends on how when you're able to drive things, execute things. So yes, the 1,000 crore plan is pretty much that's one of the things what we are driving. And out of that, we expect the wedding service to contribute 100 crore. So at the enterprise level, you want to be a 1,000 crore company, and matchmaking contributing 900 crore and wedding services contributing 100 crores. On that one, today matchmaking is 430 crores. So hopefully next 4 years or something like that, we expect matchmaking to probably become a sort of 900 crore. Hopefully, again, this is all we are ambitious goal to drive it maybe 4 years or 5 years. But definitely, once we touch 500 crore, next big milestone are fast to become a 1,000 crore company.
Yeah, I think the current business model in itself should take us to close to 750 crore by FY25 organically, even if one has to look at a CAGR of 15% plus.
Yeah.
And if you have plans of bringing in another inorganic around 200 to 250 crore, that should be good to take us to 1,000 crore plus.
Yeah, not only looking inorganic, now we are looking organically driving the growth. Okay, we are not talking about the growth we are talking about is pretty much driving organically. Yeah, so not even talking inorganic growth. Yeah.
All right. Thanks.
Thank you. No, basically we want to drive it aggressively. That we want to accelerate our growth momentum. That I think we believe that we are getting that.
Yeah, please do. I think we are a new age company, and I think it's very important for us to be at least 2x to 3x of GDP growth year on year.
Yeah, I agree with you.
Yeah. Thank you so much. All the very best.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone.
There are no more questions. Maybe we can close, Mike.
Yes, sir. We don't have any further questions. I would now like to hand it over to the management for closing comments.
So thank you very much, and appreciate your interest in Matrimony.com, and thank you for your continued support. And we look forward to stay in touch. If you have any specific question, anything, we'll be happy to take it individually. Thank you so much.
Yeah, thank you, everyone. Look forward to speaking with you in the coming days. If you have any questions, please feel free to write to us. And thank you, Saurabh, as well.
Yeah. Thank you.
Thank you, everyone. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.